So one of the things that we're best known for buying big stakes in well-known public companies and helping solve problems, like Chipotle is a good example, or buying Hilton when the market, I would say, underappreciated the business. But the other thing we do is we look for what we call Black Swan risks. Beginning in 2005, we started seeing AAA rated companies guaranteeing subprime obligations. We said this is not going to end well, and we bought an instrument called a credit default swap.
Sure, of course, you're
it was
very
a way,
well known for that.
Way for us to bet against that risk. And when the markets blew up, we made a fortune, relatively speaking. We took that capital and we bought stocks. And then a decade later, in February 2020, our concern was COVID. And we said, look, this is going to be a pandemic. It's going to have significant economic effects. We bought like a hedge. We bought $74 billion of this CDS index hedge. We made $2.6 billion in 10 days, and then we took the money and we bought stocks. And then we did something similar 9 months later when we said, look, we're going to have massive inflation. We bought an instrument called an interest rate swaption that enabled us to hedge. We made $2.6 billion on interest rate swaptions. This will be the first investment fund a retail investor can invest with in history that has that capability and that hedging capability.
But so why invest on day one, though? Because it's a giant pile of cash.
The answer, well, why do we raise $5 billion in the IPO? Why do people sign up in advance to raise? And the answer is, not only did they get a pile of cash in an investment vehicle with a good long-term strategy, but they also received an interest in our business for free. And Pershing Square Inc. is an amazing business, and I expect it to compound in value at a very nice rate over a long period of time. I think there's really never been a bad time to invest in Pershing Square, as long as you have a long-term horizon.